The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, Wednesday morning, 8:30 a.m., Inauguration Day for a new administration coming in at noon Eastern Time, 3.5 hours till that happens. Proceedings in Washington already beginning with President Trump leaving the White House. As I mentioned, noon Eastern Time. Things change for the next 4 years. We get the market positive territory coming in to that Inauguration Day. We get the S&Ps right now up 19 points at 38.09. You see the acceleration we've had from yesterday. We're back near the highs we had last week of about 38.17. We're making highs pre-market right now in the markets at 38.09. NASDAQ 100, pretty similar action, accelerating now above where we were last week, even backing this up. When you put it on even a 30-minute going back 10 days, you see coming right up to that area we had about a week and a half ago. 13,125 in the NASDAQ. You put it on a daily, that's the all-time highs. We'll see if we get there. We're within about 17 points of that price level this morning. Dow 30 up 96 points right now, 30,924. We had consolidated for a while from basically November 6th up until about January 4th. We accelerate above there. We've maintained above there, 30,922. We'll see if we make all-time highs in the Dow today as well. And the Russell up about 4 points right now, 2151, quite the year so far for the Russell. Commodities, we got crude oil up 56 cents, $53.54. Jumping around to gold. Gold contract pretty calm. A little bit of volatility recently, but you're up $1 in the session. Sunday night, we spiked to 1,800. We chop around basically 1,840 for most of yesterday. We make it up to almost 1,860, and then since about 4:30 in the morning, we've traded a bit lower back to yesterday's action of 1,841 in gold. Silver contract is flat as well, 25.30. You see the volatility in silver, though, as well this morning, above 25.60, down right now to 25.30. Notes and bonds, a little bit of lower price and higher yield. The 10-year's off 3 ticks at 136.27. We got the 30-year off 7 ticks at 168.24. We got to check in on Bitcoin, down an even $2,000 on the dot at 34,595. $2,000 seems to be a pretty usual trading range going on for Bitcoin these days. And we'll jump over to the VIX. Volatility index this morning, 2214. We were up as high as 2528 when you back it up to last Friday. Things got a little dicey, right? We had a good 40 points down on a couple occasions on Friday. We spiked to almost 26. Yesterday, pretty calm, and today, 2214 on that volatility index. In terms of what is happening in the markets, as I usually say, all focus going to be on one event today, the inauguration of President-elect Biden becomes president in approximately 3.5 hours from right now. What I will say, folks, and it's not politics, I'm talking about life. We get a lot of emails here from people saying to stay out of the politics. And what I encourage you to think about is what I'm talking about is life. It's not politics. It's very unfortunate either way that you have President Trump not participating in the peaceful transfer of power today, as has happened every time for the last 150 plus years. And you're going to say, get off the politics if you don't agree with me, all right? It's not politics. It's life, folks. It's very unfortunate that we have the Capitol with 25,000 troops and you have a president that has told all his followers that the election is not fair, and the Democratic handoff of the presidency, the most powerful person in the world, is not fair and is not democratic and is being stolen. And he is not participating in the peaceful transfer of power. One of the hallmarks of a democracy, folks, is the ability for those in power to relinquish it. It's a necessary part of a functioning democracy. And what you saw over the last 10, 11 weeks since this election played out is not how a democracy functions in perpetuity. It just does not happen. Hopefully we get back on the right track. I have announced on the show before, I have a son coming, folks. It is exciting news, one of the most exciting times in my life. In less than 2 weeks, pretty much, I have a son. And this is life, folks. It is not politics. Please think about that as we go forward over the next 4 years and move on to better times. Jumping around to stocks action, it is earnings season in a big way still. Morgan Stanley traders drive earnings surge for best year. Check out these earnings, folks. Equities revenue rises $2.5 billion. All right, Morgan Stanley, very strong numbers when they came out here in terms of what they're dealing with. How about Morgan Stanley, when you're talking about the recovery from the credit crisis? Pulling up their chart, they come out with the numbers. They're up a bit today at 76.40. We were as high as about 77.37. Morgan Stanley, though, check out this chart. You put it on a daily from 27 to 75. You look where we were in November, from 45 to 75. Accelerations across the board, and you back this thing up, as they're talking about. From $6 in the crisis of 2008, you get back to that level in 2012, the beginning. And since then, some volatility. But, man, the run from the lows of this year in the banks, folks, big time. And you look at J.P. Morgan, for instance, pretty similar action. But them, J.P. Morgan, they must be kicking themselves. The numbers they came out with yesterday, they actually trade lower, trading pretty even on those numbers so far this morning for J.P. Morgan. But Morgan Stanley, very strong numbers and trading higher after market last night and holding those highs so far this morning on their earnings. What else we got going on? How about Netflix? We got to jump over to Netflix shares, folks. Quite the acceleration. They are up $70. That's a solid 14%. This equity is up overnight. They crush it out of the park in terms of earnings. They're going to be cash flow positive this year. That's one of the biggest ones they're talking about in here for Netflix shares. You back this up on a daily. We're coming right up there to the all-time highs of 575 we made in July 13th, that is. And to zoom it in, I mean, quite a little trading range Netflix has been chopping around in. We got up to this range basically at the start of July. We've been chopping around, consolidating all the way to about 575, 501. But this morning, folks, we're going to open right near those all-time highs. We'll see how it reacts on the opening bell at 9:30 when we open. Part of this made me think, right? You see Netflix consolidating for a while. They had two tough earnings quarters in terms of July. You see they come out with their numbers, trade a little bit lower. Also come out with the numbers, the last earnings in October, trade a little bit lower. Both times they had previously, prior to the earnings, traded to the highs of that consolidation. We pull back to about the 460 area on one occasion, two occasions, three occasions. We chop around there. For October, we take off November 30th. You trade higher. We closed yesterday right at almost 500. Be interesting to see how this trades. What that's going to maybe make me do is, you look at some of the other stocks that have consolidated, and Netflix is in an arena of its own. The fact that they're going to be cash flow positive is a transition. When a company makes that transition to needing cash, especially needing cash like Netflix does, where they're spending tens of billions of dollars of content every single year, credit to Reed Hastings and the team at Netflix, because they realized the way they were going to compete is basically to outspend traditional media. In terms of when they made the transition to online, they knew they had to outspend, because guess what? Disney's coming for them, HBO, Time Warner, they're coming for them. Not the likes of any of the studios out there, etc. But you look at where they are and what they've spent, they're now going to be able to spend that money and not have to raise capital. The market loves that idea. They're up to 570 this morning. We'll see how they react. Disney trading a little bit higher on the news that they are doing well in the streaming arena. Disney trades higher with Netflix by about $4 last night as well. Stay tuned, folks. We're going over what else we have coming up. We got some earnings to talk about. We got some earnings for the rest of the week. Take a look at some of the movers this morning. Stay tuned, folks. We'll be right back.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I'll personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the markets hanging in positive territory. S&P's positive by 19 points, basically making pre-market session highs as we speak. Got about 45 minutes to go until the opening bell. Jumping around to what other stories we're looking at this morning. So Jack Ma emerges for the first time in a while since the Ant and Alibaba crackdown seen in public, addressed rural teachers live online Wednesday. The emergence follows persistent rumors about his plight. Would be really interesting to know what happened in that meeting when he got called into the powerful decision makers over there in China, President Xi or whoever he was meeting with, in terms of, I imagine there was some type of, let's just say, guidance that he take a little break from the public eye. So slowly coming back after a couple of months after Ant and Alibaba kind of reset. The Ant IPO, of course, shelved for a bit, if not in perpetuity. Interesting nonetheless. Good to see he's still around, but a different figure at this point than he was just 3 months ago over there. What else we have going on? So we got Procter & Gamble earnings this morning as well. Raises their forecast after earnings top expectations. How about an 8% jump in sales? Fiscal second quarter revenue rising 8%. Higher demand for cleaning products and grooming tools. They own Tide along with a plethora of other brands in there, folks. Benefited, of course, from some of the lockdowns. People accumulating a bunch of stuff from the grocery stores. They expect sales growth of 5 to 6% in the fiscal 2021, up from its prior outlook of 3 to 4%. Adjusted earnings will rise 8 to 10%, up from 5.8. Earnings per share $1.64 versus $1.51. Just strong numbers, folks. It continues to be that this market is many of the equities, at least the strong ones, right, beating expectations as these companies are able to basically meander situations like we had never imagined, but the agility of these companies to transform their business. I mean, you got to keep supply chains open. There's so many things that have had to take place, whether it's some of the retailers going online. Now, Procter & Gamble was sitting at about 127 coming into COVID. You spiked to 94, had a nice little up channel for a while going on. We've been chopping around in this equity since about August 6th, give or take, from about 135 to 143. Very strong company in the long run, and you're going to see it open marginally higher today at about 135 on their earnings, and strong earnings across the board, and a slight reaction on that. You could imagine that maybe you get some more out of that, but a lot of these equities, folks, they're priced for a lot of great future prospects with the economy opening back up, with the vaccine getting rolled out, et cetera. Procter & Gamble, though, as the vaccine gets rolled out, maybe you have a less propensity, right, to be stocking up on whether it was cleaning goods like they're talking about, whether it was grooming tools at home, et cetera. Maybe you go out and finally get more haircuts. I have not had a haircut since the COVID restrictions. One thing I learned, folks, to give myself a haircut. You gotta make do in interesting times, right? But I'm looking forward to sitting down in a haircut chair at some point. Doesn't mean you can't do it probably at this point, wearing masks, being safe out there. I've just chosen not to, thankfully. I don't have a ton of hair anyway, so I can take care of it myself. But nonetheless, Procter & Gamble up a bit this morning on their earnings. What else we got going on? Jumping into those Netflix numbers in terms of what they came out with exactly. So earnings per share, $1.19 versus $1.39. Revenue was a beat at 6.64, barely, versus 6.62. Here's the big one. Global paid net subscribers, 8.5 million versus 6.47 when you put it on the chart where they are. Now, the last quarter, giving them a little bit of pause here, that maybe they sucked out future growth in terms of, the COVID restrictions have accelerated so much of the transformation to online commerce, streaming, whatever it is. One of the fears of Netflix, that's why you're seeing Disney probably trading higher as well today, is that there was the fear, of course, that they had basically just added all the subscribers that they were going to add over the next year, and they did it in the course of 3 or 6 months. Well, the last quarter for Netflix says, no, we're going to continue to grow. They've got over 200 million paid subscribers for the first time. It passed 100 million in 2017, and then you jump over in terms of whether it be cash flow positive after this year and around break even with cash flow this year alone. They've taken in, how about borrowing $15 billion? Doesn't actually seem that much in terms of $15 billion in the last 10 years. When you think about this year alone, I think they're going to spend, what, 20 billion, 18 billion, something like that. And Netflix, I believe you're talking about right now, if you Netflix, you're talking about a $200+ billion company. Well, you know what? You were a $200 billion company last night. But it's up about 14% today. You jump over to the Analyze tab on the Thinkorswim platform, the Fundamentals tab underneath there, slide down, and we're looking at $252 billion, and I believe that's going off last night's prices. Nonetheless, going to pop about 14% on the open. Point being, they borrowed $11 billion over the last 10 years, and they built a $250 billion company in the process that's now going to be cash flow positive. Big news from them, and big news in the streaming arena. One of the thoughts I was having coming into this is that, with the likes of Disney coming in to compete, right, and with the likes of going from 290 to chopping around 500, basically, that maybe this has a little bit more consolidation to go. But you might see, I've been talking about consolidations for a while, but Netflix is the first real wake-up here that you have a company that accelerated higher during COVID. It meandered, of course, the first impulse. Now, Netflix doesn't have to do much in terms of meandering, all right, as in they were built for a society that works from home, stays at home, and watches everything from their computer. But the market has now had some pause, and Netflix has had pause to even accelerate further after a 6-month consolidation. I mean, one of the first things I thought is I said, man, I wonder what's going to happen with Amazon when they come out, because maybe jumping over to Amazon comes out with their numbers a week from tomorrow, all right, January 28th, and you look at the chart, similar action. Now, Amazon did have some obstacles to overcome in terms of supply, right? We've all, not all, but many of us have ordered from Amazon. Huge delays in the beginning of the shutdown as they were just struggling to keep up with demand. You've now been consolidating since about July. Pretty similar action on their earnings, as in you had earnings here trade a little bit higher, but then pulled back. You had earnings back in October, traded a little bit lower, actually. Nonetheless, at some point, folks, I imagine you're going to see Amazon trade higher, and I now am even more interested in their earnings a week from tomorrow because of kind of a similar pattern here between Amazon, between Netflix, two of the big winners during COVID. You accelerate higher. Amazon's been consolidating as well, and we'll see where they come out with when they have their earnings a week from tomorrow. January 28th, a week from tomorrow. We're almost in February, folks. What's going on? Time, it's crazy. All right, what else we got going on? United Health out with their numbers. Profit beats on lower medical costs due to deferred care. Really interesting when you look at the studies that I'm sure will be done after this. There's been a lot of interesting articles written about, at first during COVID restrictions, people were foregoing normal medical appointments, right? Maybe they weren't going to a follow-up. Maybe they weren't going to go get tested for something. Maybe they weren't going for their annual physical. And the expectation was that we would see those lingering effects reverberate through society in a detrimental manner by not getting the care they needed. What's actually happened is that hasn't happened at all. Now, the restrictions have decreased a lot of the flu or the cold, those types of things, because we've stopped spreading with masks. But just the general idea that maybe we were being over-serviced in the medical sector shouldn't be surprising. Folks, you got to take care of your health. But I encourage you to think about how the medical profession itself is so biased to bring you in as often as they can and say it's a necessary part of living. Be safe out there. We'll finish talking about United Health when we get right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I got a chart of United Health up here in a daily. So we go from about 300 pre-COVID to 187 at the lows of March. We're sitting at about 352, putting in our 5-minute, You see the plunge a little bit lower on their numbers. Just scrolling over. So the earnings, 239 was the estimate. They come in at 252. And what I just wanted to touch on, so as they put it here, they beat quarterly profit estimates, helped partly by lower medical costs due to fewer elective surgeries. There you go, right? United Health reported medical loss ratio. That's basically the percentage of premiums paying out to medical services of under 80%, 79.1. For every premium they collect, they're paying out less than 80%. They were at 82.5% a year earlier. People not going through with the same amount of premiums, and health insurance companies just sucking up all that money from the rest of us that aren't going through those procedures. When we paid for an insurance that was supposed to cover complete availability, you're seeing a lot of times elective surgeries just actually not even allowed to take place because hospitals right now have to make room for COVID patients. They just can't afford to have their hospital being filled with beds of elective surgeries. Unfortunate. Many people, they call them elective, right? But it's not like you're talking about all plastic surgery, folks. Elective surgeries encompass a lot of medical procedures that cannot be delayed indefinitely. To play both sides of that, as in it's important as well. But nonetheless, these insurance companies, as you see that dip down, I mean, some of the car insurance companies, right? We got refunds because they were making so much money because they charged us for insurance. And then nobody was driving, getting into accidents. These insurance companies, man, they're always. What else we going on as we finish up the program, jumping around to just some other headlines out there? You have Pearson. How about a 10% drop in sales? School books, right? Interesting how this is shaping so many different companies. Disney's eliminating bonuses for top executives, you know, whatever that means. They're up positive because of Netflix shares. Interactive Brokers, we'll finish it off with. Beat estimates. Good time to be a broker as options explode, as the market has volatility, and Interactive Brokers pretty calm today. Stay tuned, folks. We got a man, Larry Pesavento. He's coming up live next with Trade What You See live programming all day at TFNN. Thanks, folks. Stay tuned.